Hello and welcome to the Tuesday trading session right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Egypt's agricultural exports exceed $9.2 billion as fresh produce exports reach 6.9 million tons. South Central African nation of Zambia and Singapore are set to collaborate on carbon credit trading. Plus, China pledges to support Tanzania's tourism growth to achieve 2025 goals. Hello, welcome to the program. I'm Ladi Williams. First off, let's get a check on what's playing out in the commodities market. We see gold prices climbed to a one-week high today, buoyed by a softer U.S. dollar, while the markets await comments from Federal Reserve officials for cues on the U.S. interest rate outlook. And we see spot gold there, $2,623 per ounce, up 0.4%. So we're seeing a recovery right there for the yellow metal, 0.5, half a percent. That's for U.S. gold futures, $2,627. As the U.S. dollar did a pullback today on profit taking, that's kicked in, after a week's stellar rally. So a weaker dollar makes the bullion less expensive for buyers holding other currencies, and that's why we see that inverse relationship between the dollar and gold. To other metals now, we see the likes of spot silver, 0.5% up, $1.32 per ounce. Platinum, that's 0.3% up. It's just palladium lagging there, holding up at $1,005 per ounce. Let's get a check on oil now. See, oil prices also edged up. Well, yeah, inverse relationship between the dollar and commodities. So we see oil extending the previous day's rally, but it's $73.45, 0.2% up. Actually, that shouldn't be red, that should be green. $69.30, that's what we have for WTI. So investors are watching out for what's going to play out with interest rates and demand outlook in the world's biggest consumer of oil. And Russia-Ukraine war, they also have their eyes on that, and that's propping up the price of oil. All right, to other matters now. The UK's permanent representative to the World Trade Organization, Simon Manley, has called for a review of Nigeria's business environment. He made this known during Nigeria's trade policy review at the WTO headquarters in Geneva, Switzerland. He mentioned that regulatory hurdles and subsidies by state-owned enterprises have hindered trade and investment in the country. Mr. Manley clarified that the plea for policy review was a result of feedback received from British investors in Nigeria, who highlighted forced technology transfers, discriminatory enforcement of competition policies, and complex regulatory frameworks as harmful policies affecting investment. While commending the removal of fuel subsidies announced by President Tinubu in May last year, Mr. Manley said that market-distorting practices by state-owned enterprises in energy have continued to discourage private sector participation. Well, as COP29 conversations continue this week, stakeholders in the clean tech industry believe investment in renewable energy is a silver bullet to solve Nigeria's energy issues. I had a chat earlier today with the financial officer, the chief financial officer, Energy, that's James Fabula Jr., and he believes clean tech needs favorable government policies to actually make cleaner energy more affordable. Take a listen.
For us, we saw the landscape change fundamentally over the last 18 months, right? With the removal of fuel subsidy, increase in band A tariffs, and then diesel prices, which have been at sustained high levels, right? All of that strengthened the value proposition for solar. And for us now, we're at the point now where we can say for a fact that solar is cheaper than all these other traditional energy sources. But the big challenge, which has been one of the inhibitors to solar adoption, has been the upfront cost. So when you say solar is expensive, what you're saying is the entry point is still relatively high. Because over an extended period, say 5 to 10 years, the data shows that solar is cheaper. It's still a bit expensive bringing in components, some of the tariffs, the import duties, those could fall off somewhat, and then the enforcement of that. Financing. Today, commercial banks are lending, no knock on them, at north of 30%, some of it driven by inflation. That won't really crack that solar adoption drive we want to see. So financing has to be affordable. Again, kudos to partners. InfraCredit is also doing a great job in trying to drive cost of finance. We need to see a lot more of that, because ultimately we need to pass that on to the consumer so they can afford to get solar.
And to another conversation. Now, a recent report from PiggyVest revealed that 4 in 10 Nigerians are in debt, and 26% owe loan apps. Another study by SBM Intelligence found that 27% of Nigerians across different income categories now turn to loan apps to cope with their living expenses amidst record inflation. Well, joining us now to discuss, we have Dennis Ikara. As a business analyst at Dathan Tech, joining me via Zoom. Great to have you on the show.
Thank you, Laddie.
Fantastic. It's great to have you. So,
a pleasure to be here.
Yeah, so definitely looking at the stats there from SBM Intelligence and PiggyVest. So we're seeing, tough times, pushing people to try and get some of these loans. I guess the loans are easily accessible. But one thing I fear about those loans are the rates. They're really, really, really high. So how are you seeing the digital lending space, in Nigeria? How has it evolved over the years for you?
Yes. Thank you, Laddie. It's nice to be here. So, digital lending in Nigeria is a story of transformation, almost like going from a Nokia 3310 to the latest iPhone overnight. A few years ago, borrowing money meant you had to endure long queues, meet strict collateral requirements, and hope that the bank manager liked your tie that day. But now, just a few taps on your phone and voila, you've got the funds. Over the past decade, companies like Trade Lender, Carbon.
Checking.
All right, so we'll come back, Dennis. I'll come back to you in a moment, but definitely, I know these, as Dennis alluded to there, it's easier to have access to these loans, but at the end of the day, we've seen the likes of competition, our competition agency there, looking at managing how these loan apps, how they go about recovery, because we've seen in the past where some people have to get shamed to before they can actually pay back. So let me go back to Dennis now. So Dennis, I lost you for a moment there, but you can conclude your thought.
Yes, can you hear me now?
Yes, I can hear you now.
So I was saying, over the past decade, companies like Trade Lender, we have the Carbon, we have Fair Money and Branch. They have taken the lead, offering instant loans without collateral. And of course, they are competing with traditional banks like GT Bank, which joined the race recently with Quick Credit, which is a fast and affordable product itself. And even the regulators have stepped in to clean up the industry. The Central Bank of Nigeria now requires digital lenders to register under its guidelines, while the Federal Competition and Consumer Protection Commission ensures that they behave. No more threatening text to your contacts if you miss a payment, and it's fast evolving space. And the numbers have backed it up, with over 200 digital lenders today. The future is as bright as Lagos traffic at rush hour, but this time with fewer headaches.
Dennis, a lot to definitely unpack there, and you are seeing growth so far, with this digital lending space. But talking about most Nigerians turning to these loan apps now, to get quick and easy loans. How would you say is impacting household lending, so far? Do the benefits outweigh the other issues, we have with that lending sector?
No, it does add a lot of benefits, Digital lending has made more it has made credit more accessible to underserved populations, including those without formal employment or collateral. You know, borrowers can now access small loans within minutes, enabling them to handle emergencies, start macro business, or even cover educational expenses, etc. Okay, so picture this. It's the end of the month and you are staring at your empty wallet, and there's an expected school fees for you to make. Back in the day, your only options will be going to borrow from your friends who will never let you be, or visiting a money lender who probably charge you your firstborn child for interest. But digital lending changed all that overnight. Now, platforms like the Trade Lender, the Fair Money, and Palm Credit can disburse loans in minutes. No questions asked. People use these loans to pay medical bills. They also invest in small businesses or simply keep the lights on, all thanks to NEPA. But here's a real example. I have a friend who once used a digital loan app to buy stock for a small grocery just before Christmas. And within weeks, he doubled his profits. Digital platforms also reduce stigma as borrowers can avoid the traditional face-to-face interactions. But of course, borrowers need to be cautious because high interest rates and short payment period can turn a blessing into a lesson in the financial literacy.
And do you think a time will come where most of these digital lenders can actually, give you more time, to pay these loans and at a more affordable rates? Do you think that's where this, segment is going to, or will it just remain like this, with higher interest rates and, short times to pay?
I think it's fast evolving and it will change. It will get better. It only gets better. Like I tell people, digital lending fosters this financial inclusion by extending credit access to underserved population. So it's going to get better with time. For instance, I know carbon integration with mobile wallets ensures rural farmers and traders to secure loans without even visiting a bank branch. And do you know that more than 40% of Nigerian adults still don't have access to formal financial services? And that's a lot of people compared to the Nigerian population. But here's the good news. Digital lending is breaking all barriers with smartphone penetration exceeding more than 100 million users. Even someone in the most remote village can now access credit if they have a mobile phone. Let me share a heartwarming example. Recently, in northern Nigeria, a group of female farmers used a digital platform to get loans for fertilizers and seeds. And by harvest time, their yields have doubled. What's more, these women don't have to rely on middlemen who have previously exploited them. Digital lenders like OPay, Paga are also making things seamless by integrating mobile wallets. So borrowers don't need a bank account. It's like turning a no-entry sign into a welcome home mat for millions of underserved Nigerians, which is a wonderful development.
Right, and definitely the players, most of these businesses that are playing in the digital lending space, most of them also have to give out these loans to people that they don't know, they don't really have that much information about. So I'm guessing that's why the rates are really, really high. But how are the digital lenders, how are they managing risk, on their end? How are they managing, reducing defaults for most of these loans?
Risk management in digital lending is like trying to predict the weather in Lagos. It's unpredictable but manageable with the right tools. So digital lenders rely on algorithms that use unconventional data sources, such as how you recharge your phone, or how your social media, or even your social media behavior. Yes, that tweet you posted last week about loving suya might just be your unofficial credit score. Take fair money, for instance. They start borrowers with small loans and scale based on repayment history, leveraging on AI to minimize defaults. They use AI to assess a borrower's behavior and send reminders to ensure repayment. And if someone does default, they don't just send debt collectors. They negotiate repayment plans. Some platforms also partner with credit bureaus to blacklist chronic defaulters. I currently work at Daftan Technologies, and I work on projects that integrated blockchain technology into credit system. This ensures transparency for both the borrowers and the lenders, making risk management more robust. Let's just say it's harder to ghost a lender when there's a blockchain involved.
Right. So, okay. So, definitely we're seeing innovations with what you've shared so far. But what are you expecting, going forward as, Nigeria, continues to, play home to these businesses, and what risks are you seeing for the digital lending space, going forward?
Yes. Thank you once again. The future of digital lending is so exciting. It feels like we are watching a Nollywood blockbuster in real time. So, like I was saying earlier, blockchain is making transactions more secured, and we are seeing a rise in peer-to-peer lending platforms. Imagine borrowing money from a faceless institution, but from someone just like you, only this time with a bit more cash to spare. For instance, Huda Bank is combining spending data with personalized credit offers, showing that even a digital bank can enter the lending space. That's another exciting trend. Some platforms now reward borrowers for good repayment behavior with points, discounts, or even larger loans. And at Daftan Technologies, my team are exploring using APIs, that's application programming interface, to connect digital lenders with e-commerce platform. Imagine this: you are shopping for a fridge online, and a loan offer pops up saying, "Pay later, no stress." That's the direction we are heading. Convenience, accessibility, and innovation all rolled into one. That's a very good thing. It's exciting.
All right. I guess we'll keep watching how the credit economy grows in Nigeria. But it was great having your perspective, Dennis, here as a business analyst at Daftan Technology. Thank you so much for joining us today.
Thank you, Ladi. Pleasure to be here.
All right. So after the break now, we'll get a check on what's playing out in most of the markets we track. That's in a moment. Just stay with us. All right, time to get a sense of how your money is performing at intraday. We have Anete Edet with the details there, and it seems like it's a marginal gain. For the NGX, just about 4 basis points. Guess nothing to see there.
Well, Ladi, you may not see something there, but I think I also see that the market is coming from Friday, which it ended the week in the green, and then, of course, carried it into Monday's trading session, beginning the third week of November.
With a marginal gain, yes.
Yeah, marginal gain. And we still see that's a marginal gain. But we all, some of us like to see that green, so that because you want to see your price going higher, while some of us will want to see that red so that you can decide to go into the market because of a cheaper level. So
right.
It just depends on where the pendulum swings and then which side of the market that you pick. But let's tell our viewers what the market is moving at intraday. We take a look at the board there. Greens had it. Actually, the market is in kind of a mixed session there. We see both the NGX, that's for Nigeria stock market, and the Johannesburg Stock Exchange being in the green at intraday. But of course, Johannesburg Stock Exchange was the biggest gainer there, and it's still within that 84,000 level, which it had lost at some point. And of course, when I mentioned that it was the biggest as at intraday, this was the last track, 1.12% at intraday, beating Nigeria's all-share index as at the last track. But these numbers are oscillating, going back and forth, whether up and down. And of course, we'll take a look at how it will close the end of Tuesday's trading session. Now, but for the other side of the markets on the African continent, EGX 30 was down at intraday 0.43%, 30,731.04, while for Monday's close, the Nairobi Stock Exchange, that's for Kenya, was in the red, 0.74% for the close of Monday's trading session. So that's it for the markets for the African continent. And now let's talk about the markets in broader perspective for Nigeria's markets. Yesterday, not really yesterday, but at some point we had the figures well, what we call the banks that have over 1 trillion within their market cap. And that's talking about First Bank, UBA, GT Bank, Access Bank, and Zenith. So the acronym they form is called the Fugars. So they released so far we've assessed their 9 months performance pretty well, but how did this reflect on the market, on the sector's performance? We'll have Abiodun Adedo to tell us more about that, as well as some other factors to look at in the market. Thank you for joining us, Abiodun.
Yeah, thank you very much, Victor. It's good to be here once again.
Sure. Okay, so now talk us through. So far, we saw these 5 banks, the Fugars, which will always have a very significant impact wherever side that they move for the market. So now, what is your assessment of this big banks? Judging from their 9 months performance.
Okay. The Fugars, also called the Tier 1 banks, they've done extraordinarily well, to be honest, this year, and last year was impressive as well. So they've practically consolidated on the positions as being the biggest banks in the land. And this has actually been helped by, partly higher interest rates regime. The banks are making decent spread in terms of net interest margins currently, right? And also, we have the impact of the depreciation of the local currency on the banks, which has benefited them. For some of these banks are sitting on FX-related assets. So by default, these assets have been repriced and become bigger in terms of Naira terms. So they really given returns, in double digits, impressively, right? Some of them have even done almost 80, 100%, on different metrics, and which is quite impressive. So we are seeing bigger banks, and hopefully they'll be stronger in years to come.
Okay, so now let's move away from the bank's performance and talk about the inflation numbers which came out on Friday. So how is this affecting the equities markets?
Yeah, the inflation numbers, of course, it's not a big deviation from where it's been coming from. It's still not of 30, and we know what the numbers really look like, broadly speaking, right? Not in the immediate upon announcements, of course. Any investor trying to put monies, of course, into any asset class will be thinking about inflation and the expected returns, because the minimum you want to beat is inflation. So this is going to continue to play a bit in the minds of investors, be it investors investing in the banks, consumer goods, telcos, and whatever asset class, even if it's non-equity, because you just want to stay afloat by beating inflation numbers. So we're going to see how it's going to play out in coming days, but not so much is happening currently.
Okay, so now that takes me to my final question with you. We have just about 8 trading days left for the month of November. So what's your outlook for the equities market for these remaining days of the month?
I don't expect the equity market to change so much in terms of landscape, except there are new or fresh stimulus coming into the equity space between now and the end of the month. But of course, you're likely to get a form of Santa rally in December. Everybody is preparing for year end and trying to position ahead of the new year. The big banks, of course, you expect them to continue to come with something very, very juicy and attractive to investors, of course, and by then you'd expect a few of them to have completed the recapitalization exercise as mandated by the apex regulator. So not so much will be taken. I don't expect a massive or big jump, either up or down, from where we are to the end of the month.
All right, I think we'll leave it then. Of course, look out for how the countdown to the end of November trading. But thank you so much for your analysis on the show.
You're welcome.
That was Abiodun Adedotun, equity trader as well as an analyst with FBN Quest for the market numbers at intraday. Okay, so let's talk about the Middle East markets. Middle East markets, we see gains dominating intraday activities. where we talk about the Dubai index up 0.4%, Abu Dhabi 0.54%. For the other two markets on the continent, within the region, Tadawul 0.55%, Qatari Stock Exchange 0.27% at intraday. Those numbers are mostly positive, except for the Qatari Stock Exchange. Now, let's talk about the United States market. Well, we see the stock futures there dropping. This is ahead of major earnings, but the reason why this is dropping is because of the geopolitical tensions in between the United States and Russia. Let's not forget that the U.S. President, Joe Biden, had already allowed Ukraine to use U.S. weapons to strike inside Russia, while Russia's president has already said that, okay, now there's no threshold for the use of nuclear weapons, so we're kind of trying to contemplate the use of nuclear weapons, so investors have sought protection amid the rising tension. But then, at the same time, for the close of Monday's session, we saw that the shares of Tesla was what revved up NASDAQ. NASDAQ was in positive territory, as well as the S&P 500. And so far, about 93% of S&P 500 companies have reported quarterly results so far, with 3 quarters exceeding expectations and more than 60% beating revenue estimates. But so far, the market will be expecting Walmart to release its quarterly results, while tomorrow will be the almighty NVIDIA, which also would make its footprint on the NASDAQ index. That's for the United States market. And then finally, for the Asian markets, we see the index is closing higher. Yesterday, we saw that the Asian markets, they had been in the red, but this time they've flipped back into the green. And this is because investors there had assessed the Chinese financial policy makers at an investment summit in Hong Kong, where the Chinese premier said that at the Global Finance Summit in Hong Kong, that China will support Hong Kong's innovation and financial reform, enhancing the city's financial competitiveness. And he also reiterated that Beijing's commitment to explore and implement measures aimed at building Hong Kong as an international financial center. So that's what revved up the market. We'll take a look at the Nikkei. The Nikkei almost closing back into, it had lost this level, but it's gone back about 38,000. The same for Kospi, same for Hang Seng, the same for Shanghai, and all the markets within the region for the close of Tuesday's trading session. So, Ladi, that's it for the markets that we look.
I guess markets not looking too bad, with most of the trades we're seeing so far. But we'll keep tracking to see if that Trump trade returns at some point. Thank you so much, Native, for giving us the details there in most of those markets. Now, we'll definitely be heading on to Juliana in a moment. But let's get a sense of what's playing out there in Europe now. We see Germany has long complained about a lack of skilled workers, and the country's economy has been paying a price for it. Now, some German companies are appealing to the government to step in and help. So we'll definitely, speak about that too. That's happening in Europe. But let's start off with Juliana. I believe Juliana should be ready now. So I got a report, Juliana, that there's a protest at Downing Street, and it's the farmers at this time. What are you hearing, Juliana?
Good afternoon, Laddie. It's snowing. It's snowing. We discussed the snow, didn't we?
Yeah.
Yesterday. It is snowing in the UK, so we're having a couple of technical issues here as usual. But the cold weather hasn't stopped an onslaught of farmers descending upon Downing Street this morning. There are a series of protests that are being arranged by the National Farmers Union, and there are multiple issues that farmers in this country have. I suppose we should talk about the first issue, which is the change in inheritance tax. Now, this was controversially brought in a couple of weeks ago by the Chancellor of the Exchequer, Rachel Reeves, basically mandating that 50% of the tax, 50% tax will be imposed on children who inherit their father's or their mother's farmland. Now, that is huge. There are caveats. I believe that the land has to be worth over £1 million. But this has caused a huge concern amongst farmers in the UK. And again, like I said, the protests are so multifaceted and multi-layered because the issues that they have had hasn't just stemmed from the fiscal document we received a couple of weeks ago. This also goes back to Brexit trade laws, because if any of our viewers are watching in the UK, you would have seen over the past couple of years an influx of cheap imported meat and dairy products, especially coming from places like Australia and New Zealand. In fact, we've got, you can go into some supermarkets in the UK, Laddie, and you can have beef from Brazil and places like that. And I think farmers in the UK feel that they've been massively undercut, not looked after. And on top of that, they've now got this new inheritance tax that they think is just going to send them completely out of pocket. Now, we have had some reactions, pretty strong reactions from the government, both Rachel Reeves and Steve Wright, the Agricultural Secretary, have been defending the Labour Party on the airwaves this morning. They're saying that basically farmland has become a loophole for people who want to hide their money and not have to pay any capital gains tax or inheritance tax. You've got lots of celebrities and wealthy individuals who have been buying farming land up and down the country, not to produce food, but basically to hide their money. So the government say that is who they are trying to tackle during these policy changes, of which, again, they've spoken about the 22 billion black hole that was left by the previous government. They are trying to fill that gap. And they think one of the ways of doing that is to tackle wealthy individuals who are buying up farmland up and down this country. The only problem is it is affecting those who are doing a decent living. And as you know, who owns the land owns the land, and English farmers are not happy that they are being punished. And basically, they feel that they're just not going to be able to pass down centuries-old farming land to their children. So this is an ongoing debate. As I said, the snow and the cold weather, Laddie, hasn't stopped the farmers descending onto Downing Street. Huge story in the UK, and I'm sure we'll hear more to come from the Prime Minister in the coming days.
Right, and definitely not easy, protesting in the snow. But do you think this will continue this week from their body language?
Oh, no, it absolutely will continue. As I said, you've got some celebrity farm owners in the UK. One of them is Jeremy Clarkson. Our viewers may be familiar with him because he was quite a popular presenter on Top Gear, that car racing show that is global. He owns one of the farms. He's been out and about, down with the protesters, asking for the government to U-turn. The government insists that they won't be U-turning. But let's see. I think the sentiment is quite strong in this country of making sure that farmland stays in the hands of the families who built the farm. We're also having Kemi Badenoch. Kemi Badenoch, of course, is the leader of the Conservative Party. She put a big piece about farming out in the Telegraph newspaper this weekend. Apparently, she is due to speak at that protest later today. And there are several other Conservative MPs who are out and about with protesters at lunchtime right now, immediately calling for a U-turn. And as I say, I think, if you are in the UK and you go to some of the, shall we say, more reasonably priced stores, you will see that, British beef, British chickens, they cost a lot more. And now people are able to buy chickens for £1, £2.50, and they're cheaper imports. So, it's multi-layered, but the big thing is that inheritance tax. That if your farmland is valued at over £1 million, if you pass it on to your children have to pay 50% in tax to the government. And some farmers say, that is just completely out of the question. They just cannot afford to live. So yeah, big conversation, and that is likely to rumble on in the week.
Right, we'll definitely be tracking to see how it unfolds. But as that's happening, we see the Bank of England governors facing questions from MPs. What are you hearing?
Yeah, that's right. the Bank of England Governor Andrew Bailey will be in front of the Treasury Select Committee at some point this week, really to discuss fiscal policy. Of course, we know interest rates still biting hard, particularly concerning mortgage holders in this country. I think one of the issues we have here with the cost of living crisis is that there appears to be small pockets of society that are sharing the burden for everybody. And he is going to have to answer questions on that. Also, he's going to have to answer questions on the modelling and whether or not the modelling of CPI is accurate enough. Inflation has come down dramatically. In fact, it's still hovering below now that 2% benchmark that the Bank of England has set. Yet we discussed last week, Laddie, that food prices in the UK are starting to trickle up. So there are lots of questions that he has to face, and what the Bank of England are doing to sort of make sure the economy comes back in track. So yes, Andrew Bailey, the Bank of England governor, will be in front of the Treasury Select Committee at some point this week.
Right, and how's all of this shaping trading at intraday?
Let's have a look at those numbers. I usually have some magic on my screen, which I don't have today, but I do have a computer screen right by me. Just a moment, having a look at those live numbers. Right. So the all share, Laddie, it's down 0.48%, and the FTSE 100, the blue chip, that's down by 0.40%. Ah, the magic is there. The FTSE 250 is down 0.54%. Let's have a look at that currencies board. Okay, so the British pound, as we can see, is trading down against the US dollar. £1 will get you $1.26 at intraday. The pound is also worth €1.19 at intraday, and the pound is trading down, or it's trading flat against the Japanese yen. So £1 will get you just above 194 Japanese yen.
Fantastic. Thank you so much, Juliana. Always great having your perspective there. What's playing out in the UK?
Thank you.
All right, now we say Germany, they've long complained of a lack of skilled workers, and the country's economy has been paying a price for it. Now, some German companies are appealing to the government to step in and help. Well, Lars Holter is with DW and brings us more about that. So it's good to have you, Lars. So what are you hearing about the latest initiative?
Thanks for having me, Ladi. Yes, indeed, Germany is having massive problems filling skilled and specialized jobs. Much of it has to do with the country's demographics. Over the past few years, and also for the next couple of years, we will have the so-called baby boomer generation retire. That's a massive part of the German workforce, and there are not enough young people coming after to fill those jobs. So we've been having problems in all kinds of business sectors. It takes longer right now to build homes. It's hard to find plumbers and electricians. There are not enough nurses and people working in care. And yes, in the high-tech field, there's so much unfilled demand for skilled workers that it's been actually slowing down progress. Now, the Association of German Startups says that the government should cut bureaucracy and lower hurdles for skilled immigrants, make it not only more attractive for people from abroad to come and work in Germany, but also make it easier and faster. Here's just one mind-boggling fact about immigrating to Germany for work. You can't actually file for a work permit if you can't provide a lease for an apartment. However, it's almost impossible to find an apartment and rent from abroad. Like before you're even here, it would be so much easier to let people come here, start work, and then deal with finding accommodation later.
So how attractive is the German startup sector for immigrants?
I guess it's very attractive. The sector is growing fast. This year, over 500,000 people are working in young, innovative companies here. That's 100,000 more than even a year ago. Within those startups, 30% of employees are immigrants, and it's 45% in so-called scale-ups. That's companies that are currently outgrowing their startup phase and that are hiring and getting bigger. The official work language is usually English, which is certainly attractive for for people from abroad. Most of them at this point are coming from India and Bangladesh. No surprise there, as those are countries with a high amount of skilled tech workers that are in demand here. But there's also lots of people from Africa. There's people from Ukraine, from other European countries, and even from the US. That last one actually might become interesting to keep an eye on, as many are wondering what's going to happen in the US under Trump 2.0. We might actually see people trying to move abroad and work elsewhere.
All right, Lars, so what's playing out in the markets in Europe?
Well, again, and much like yesterday, not too much is going on for stocks in Germany and Europe, and maybe that's a good sign. We've had a lot of action recently with the US election, the government crisis in Germany, which is still ongoing, by the way, as the parties are trying to position themselves for this coming snap election. And considering all that's going on, the fact that we're seeing pretty calm markets is definitely good. Now, today we're getting some fresh inflation data. We're expecting 2% for the Eurozone. And if we're seeing this, experts are obviously talking interest rates again, expecting rates to be lowered to 3% mid-December, and then to be lowered another up to 6 times next year.
All right, thank you so much, Lars, for the details right there in Europe. All right, so other stories now. See Egypt's agricultural exports. That's surpassed $9.2 billion. That's about 460 billion Egyptian pounds. And that's according to the minister right there. That's the agricultural minister. Said fresh produce exports of about 6.9 million tons, valued at over 4.1 billion was exported, while processed foods added about $5.1 billion to that amount. The minister highlighted agriculture's role in contributing over 15% to GDP, employing 25% of the workforce, and strengthening foreign currency reserves. He also stressed the need for modernizing practices through technology to drive progress. The ministry's efforts include recycling agricultural waste, expanding livestock and fisheries projects, and automating 20 agricultural services. More than 3.2 million agricultural holdings are now digitally registered, and they're targeting 5.8 million holdings. Additionally, a governance system for subsidized fertilizers distribution ensured the delivery of 40 million bags. That was last season. So our next conversation now, the demand for rice and other staple commodities normally rise astronomically, especially during festive seasons like Christmas and Easter. However, this year presents a different scenario. The price of a 50 kg bag of rice, according to financial derivatives company, has decreased by 13.3%, falling to 104,000 naira mid-November from 120,000 naira in September. Let's talk to Rosemary here now. She's an analyst with financial derivatives company. Great to have you, Rosemary. So what's contributing to this unexpected decline in rice prices?
Ladi, thank you for having me. So typically what has caused the downward pressure in the price of rice is basically increase in supply. Now, we've seen that India, which is the top exporter of rice, has removed its export ban on rice. The export ban was placed in July of 2023 because the country was experiencing high inflation and an increase in the price of this commodity in the domestic market, in its domestic market. So it imposed this ban. But earlier last month, it was removed. So with this, we see an increase in the supply of rice into the global market, and this would ultimately help to stabilize the global price of rice, which has risen to its highest level in 15 years. In addition to this, we've seen the relaxing of strict regulations on the Nigerian land borders. So this has allowed more of this commodity to flow into domestic markets, which has ultimately helped to increase the supply of this commodity in Nigeria. Lastly, rice harvest season typically comes after the rainy season, so which is between October and December. So with this, we see increase in domestic supply, increase in Nigerian rice in the market. So together, we are seeing increase in domestic supply and increase in competition between locally produced rice and this imported rice that is in increased supply now. So both these factors, increase in supply and increase in competition, help to put reduce the pressure, reduce the price of rice, basically, of this commodity, basically, in the domestic economy. So these factors playing together has helped to reduce the price of this commodity, and that is what we are seeing
Right.
currently.
Right. I guess, Rosemary, like consumers need a break right now, especially in Nigeria. So that means we could be assured of affordable rice, for this Christmas and maybe going into 2025.
Of course, yes. Typically, what causes an increase in the price of this commodity during the festive season is increased demand. For instance, during Christmas, we see a lot of companies gifting their employees, their clients, and other key stakeholders hampers and gift items, which most times includes rice. So there is a tendency for demand to increase during this period, which will cause an upward pressure in prices. Um, but an upward pressure in the price of this commodity. But typically, after the festive season, going into February of the following year, we usually see this demand ease out, and which will also cause price to stabilize. So between December of 2022 and February of 2023, the price of this commodity fell by 11.6%. And between December of 2023 and February of 2024, we saw the price of this commodity dropped by 14.3%. This is basically because after the festive season, consumers usually have like stockpiles of this commodity in their households. So they do not need to go back and buy more of them. So demand typically falls during this period. So yes, we
Okay.
would expect affordable rice going into 2025.
All right, definitely. I'll be looking forward, to that because everybody, we need to get all our jollof rice and all of that festivity going on for December. Thank you so much. That was Rosemary Adibe, as an analyst with Financial Derivatives Company. Thank you.
Thank you for having me.
All right, now let's look at other stories now. We see in Zambia and Singapore, they've signed an agreement there looking at boosting carbon credit trading, paving the way for future carbon credit trading that would help the island state meet its climate targets while channeling finance to the landlocked African country. We see an MOU was signed between the Minister for Sustainability and Environment, that was Grace Fu, and Zambia's Minister for Green Economy and Environment at the Singapore Pavilion. With Zambia and Singapore, the ultimate aim of the agreement is for it to advance into bilateral pact where cross-border carbon trading can occur in line with a segment of the Paris Agreement called Article 6. Such pact, known as Implementation Agreement Singapore, can buy credits from carbon projects in Zambia to meet its climate change targets under the Paris Agreement. And the government of China is committed to supporting Tanzania in its efforts to attract 5 million tourists and generate $6 billion in tourism revenue by 2025. Tanzania recorded 2.02 million tourist arrivals and about $3.53 billion in revenue in the year ending, that was July 2024, to meet its 2025 goals. The country needs to attract an additional 2.97 million visitors and generate $2.47 billion more in revenue. And China has actively promoted Tanzania as a tourist destination. Initiatives such as the Film Tanzania Amazing, starring Chinese cultural and tourism ambassador Kim Dong, have boosted awareness of Tanzania's attraction among the Chinese audiences. All right, let's take it on to the markets now. Let's get a check on what's playing out in the digital market. We see it's red on the screen there for Bitcoin, Ethereum, and major altcoins on CoinMarketCap. Just a few pockets of green this afternoon. We're seeing profit taking at this point. I'm sure that was expected from most investors. let's look at the headlines there in the crypto market. We see Hamster Combat. I'm sure you remember Hamster Combat, that Web3 game. Saw a dynamic. There's been a dynamic shift right now, and the makers of the game are looking at bringing most of these users back, because definitely some users got dust from the last compensation, and they left it, so the monthly active users dropped dramatically. But we're seeing the makers there trying to make some kind of comeback in the market. We'll see if that's going to happen. They're trying to engage users again. Then we see MicroStrategy. They've acquired a fresh 51,000 Bitcoin. That's the largest corporate holder of Bitcoin. They've acquired more Bitcoin. At this time, it's a fresh purchase. So their net worth is reaching about $30 billion now, for Bitcoin. Now we see now Bitcoin is now the 8th largest asset class by market cap. Last time they overtook Aramco. That's the biggest oil company there. But Aramco has gone back up with market cap above it. But now Bitcoin is above silver and companies like other like Meta platforms. I think they're above Meta platforms. I'm going to get that list at some point. So we're seeing Bitcoin now the 8th largest asset by market capitalization. Let's talk to Emmanuel Anyasi now as a crypto influencer. Hello, Emmanuel. Great to have you.
Yeah, hello, Ladi. Good afternoon.
Yeah, so we're seeing some chatter with the makers of the Hamster Combat, the guys backing that project. I'm sure we've talked about this a couple of times, but they're back in the news again. This time, they're trying to engage users again. What are you hearing about that?
Sincerely speaking, I haven't been following the fundamentals of Hamster Combat per se. This season, I just focused on trading, and the chart it actually broke out, and it was expected to actually rally up, and it did. And it's just a pullback that it's doing now, and it's going to go because from the chart, I could actually see that sellers are actually exhausted, and there is no other way than to actually for buys to actually start coming in. So if they're actually bringing in another new way to actually engage the community, that is good. They have a lot of members. They have over 30 million people. So anything that they are going to actually do, we actually push the token higher.
Right, and do you see most of these Telegram games, do you think they're going to have some kind of rally, at some point? We have the likes of Dogs, that's released. We have Hamster Combat. Do you think they're going to have some kind of rally at some point, or they're just going to stay around these prices for the longest time?
No, they are not going to stay this price for the longest time. You see, projects like all these Telegram, this thing, they have good source of revenue. Like many of them actually brought in this exchange affiliate thing. With the number of people that actually they onboarded into their platform, the money they are raking currently now is actually very, very huge from the affiliate percentage they're actually gaining. And also for the fact that they have a very large community, anything they are going to bring in is going to actually move forward. It's going to actually sell. And do I think that it's going to go up more? Yeah, I do think, because the first phase sellers are actually out. Anybody that is coming in now is actually buying to hold, because it seems that these things actually have potential, and they're also listed on the biggest exchange in the crypto space, Binance. So there's a lot of potential in them with a large community, with their tokenomics. Like many of them, all their tokens is actually outside. Like Hamster, I think they share like 70-something% of the tokens. So Dogs shared like 90% of the tokens. So everything is actually outside there. So we just actually, if they just keep building, I think the prices will just actually start moving together with the market direction, which is up.
Right. All right. We'll keep tracking to see if they actually outperform. Most of these altcoins already are. But thank you so much, Emmanuel Anyasi, who's a crypto influencer. Thank you.
Thank you, Mike.
All right. So that's how most of the markets we track are looking. As we're seeing marginal gains for the local bourse, but most of the global markets, some have ended in the green, while some are still looking quite weak at this point. But we'll give you more updates tomorrow for most of the trades today. Thank you so much for watching. You can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can also visit our website for more details, www.channelstv.com. Thank you for watching. From me and the team right here at Channels HQ, it's bye for now.